What's up, guys? Welcome to the trade room where we don't focus on the money, we focus on the percentages, the how, and the big picture. And today we are here to have a Drive Shack update. All right, we have a Drive Shack update. We got a few plays going on with Drive Shack. And we're gonna take a look at the condition of where we are right now because it actually doesn't look good. And this is I'm actually glad to be putting this up because when you're in this game, whether you're in investing, whether you're in options, you have to lever risk versus reward, and you have to game plan and have a strategy set towards that. And so I weighed out my risk and my reward and came up with the game plan. And so let's see where that game plan is right now. And we're also going to go ahead and take a look at a little bit of a technical analysis of where we are, where we're heading, timing, which timing, it's always the hardest thing. And then we're going to take a look at the actual contracts that we may have or may not be getting into moving forward. And so we come right here again, Drive Shack, quick overview, point blank period. If you are investing in Drive Shack, if you have a portfolio and you are looking to diversify it, and you, let's say we're looking for a recovery or entertainment stock, Drive Shack may have presented an opportunity for you, but let's say airlines, cruise ships, all these different recovery stocks that have been affected by the C-19 and are kind of going through a recovery phase along with the economy, as well as the markets, the equities markets, right? So if you're trading Drive Shack, or you're investing in Drive Shack, you're betting that the economy recovers. So if you think we're gonna crash down and go to hell, then don't even look at Drive Shack at all, right? And so that was the thesis behind getting into Drive Shack, was to have a part of my portfolio be that of entertainment. Okay. And the initial purchase was October 20th. Shares were about 1,000. Now, when I buy options, I like to also buy shares because shares don't expire. Shares don't expire. You have it forever. And I do have a long term viewpoint on Drive Shack as well as the short term. And so with dollar cost averaging, my average, comes out to be about 223, and I believe Drive Shack right now sits about 254. And so, the long term business model, and what I mean by that is, Drive Shack is opening multiple locations. They're opening multiple locations over the next few years. And that is one of the catalysts, the long term catalyst, and even the short term catalyst, because they should be opening two new locations this summer. Now, they've been saying this summer, and we're waiting to get that news and that catalyst of when that officially will be. But that is what I took into mind deciding to invest in this thing short term, but also too long term, because the business model behind these new locations is that not only does it cost less to build these new locations, but the services that they are providing cost less, and meaning that they will gain more revenue over time. And that will be important as we look later down in this Drive Shack video. But I wanted to paint that picture and that context. Now, why are these contracts getting clapped? Well, we used technical analysis to uh, place our timing on these contracts, but the market conditions, as we look at investing.com, the market conditions aren't the best. Okay, the market since February has kind of traded, if not sideways, downwards. We've had some days of like 4 to 6 consecutive days of uptrend, but again, this is a entertainment position in a portfolio, and we have to bet that the market is going to do okay moving forward. And I still believe the market is going to be just fine. I'm really looking at is the profit margin, the gross profit margin. Now, this being a recovery stock, a lot of the airlines, a lot of the cruise lines, pretty much have similar stats to this. But what's important about Drive Shack is that we need the gross profit margin to continue to grow, because it fits right into their business plan. Where if it costs them less to build these buildings and to provide their services, and they keep receiving and they keep getting these high numbers during the summer months as an entertainment golfing company, then we believe that not only will they pay off their debt over time, but eventually that debt to equity ratio here will look better over time. And honestly, it has been looking better since Q1 of 2019. And it grew until guess what happened? Coronavirus happened, and entertainment, leisure, things got clapped, right? And you can see the gradual or even the drastic change once they opened their doors and they started providing their services. And so, one of the things that we're going to be looking for, if we believe that their gross profit margin will continue to rise, we had to look to their earnings call. We had to look to their earnings call, which their earnings call is coming up August 3rd. And so we have to look at their earnings call and see if they are profitable, which for golfing and entertainment, they should have been profitable for what? Q3 and Q4. And we'll talk more about that. The initial game plan is still in effect. I have 1,000 shares at an average of 223. My game plan is to continue to buy these shares as long as they are at a certain price, which was always under $2 and also under $2.40. So it's in my range to go ahead and what, continue to buy more shares over time. But let's look at the charts and see what we are going to do about these options that we have. And then let's take a quick look at where we were in that October region. I picked up some 250 calls in that October region when it was at $1.33. This is October, all right, over at $1. Start buying shares, started buying options, and we bought an option to expire in October. I'm sorry, in August, because we knew that there was an August 3rd earnings call coming up, and if Q3 and Q4 are supposed to be their most profitable months within the year, then we can see an uptrend that told us from the RSI having higher lows back after the C19 pandemic. We saw these higher lows. We got a few confirmations. We saw the KDJ give us a upwards confirmation, and we saw the MACD here. Even though we started buying in October, we saw the MACD here closing out its bearish period and opening up into a bullish period. What has happened is that each month it has been so bullish, has been so bullish from the October region, and we crossed this mid Bollinger and we're making our way to the upper Bollinger at $4, that we now have gotten a cool off period. And this cool off period here sits in the July region for the month. And we can see that if we take a closer look, we have come down to literally touch this mid Bollinger here, which to me tells me that we are looking to bounce off of this mid Bollinger and continue this long term bullish trend here. And when I go into an even longer time frame, where we're looking at the quarter, we saw we had two great quarters, right? We had that would be 6 months. We had 6 months from the C19 period where we had nothing but green, and we actually currently still have green in our current quarter, with an RSI that continues to have higher lows, and a KDJ that shows momentum going upwards, and the MACD that we need this MACD to decide to do what, to close and to make a positive price movement going up here. So that gives you a little bit of a short term and long term view of why we decided to get into Drive Shack and what it looked like. And we decided that we could have had this $5 call grow in value, and so that we could exit out some of the contracts before the earnings call and keep some of the contracts into the earnings call. Now that game plan has changed, and I mentioned timing earlier. What should have happened earlier? What should have happened earlier was as I was accumulating these contracts here, and as they sat at the 8 cents here, which really means $8 range, on July 14th, when these contracts popped to $48 each, and my contracts were in profit. We should have taken some profit, right? We should have taken some profit and maybe sold what half of these contracts that we have in profit, and then left the rest for earnings. And sometimes that is the hardest thing to do is to take profit. But now that we haven't taken profit, and from charting we can tell that these $5 contracts, just to be realistic, unless Drive Shack over the next 25 days or so goes parabolic, are probably not going to be in the profit, right? So the new game plan is to what? Continue to buy these shares. Look at the 250 calls for earnings because I do think that they will be in great profit for earnings. We'll continue to add to these um, 250 calls now that they sit around the I'm sorry, they sit around the $30 range, and accumulate those and try to what break even with what we have here. Same case right here with the $5 calls. We're not purchasing any more of those. We may be getting the 250 calls, but we're really targeting the long-term contracts now that we've had to what bite the bullet on these short-term contracts. And so what we now look at are these February 18th 2022 $5 calls, right? Or look to get those 250 calls at a cheaper range. And the reason why we still do that is let's do a little charting here. Now, long term, long term, I believe that Drive Shack as a entertainment stock or play, as a recovery play, as the economy recovers, and as the businesses recover, we will be at we would be at a higher price than where we are now. And so what I'm drawing here is a little bit of a fib retracement here: swing high, swing low, take the Bollinger Bands off. If you can work with me here, Bollinger Bands. Take the Bollinger Bands off and let's look at this range here. We know that our earnings call that's coming up for those short-term contracts is let's see, August 3rd is our earnings calls. Our contracts expire on August 20th if you hold that contract, if you hold that short-term contract. And so we don't have a lot of time, right, for to get these bullish candles to get us where we need to. But what we do know for sure is that after this downwards movement, we touched the bottom of this fib retracement here. We worked our way, tested this next fib retracement, broke out, and all we've been doing is we've been range bound in this area, even to the point where when C19 hit, we dipped below this range, a range we broke out of. And so what happened over the next few months here is that what we went back to what test this range here. And what do we expect to happen? We expect to what come a little down, hover right a little below this range, but we expect to what break out of this range and make our way to this $8 range here that we've done in the past. And we did that in 2018. And that's when the profitability of this company started changing as well. This price prediction is also validated by the MACD, which shows a continued long term bullish trend, as well as these higher lows that we've seen in RSI, as well as a KDJ that shows positive bullish momentum. And so, long term, the strategy is still to continue to buy shares, and as the economy recovers, this entertainment stock should recover as well, and it's make its way to the bare minimum of $8, and eventually back to its peak, as long as this company continues to be profitable at the $13 range. All right. A lot of times, and I'm glad I'm doing this video now, when your investment is not in a profitable area, that can deter you to sell. But you don't make money when you sell your losses. You only sell your wins. And so if we're looking at this long-term quarterly chart here, we can see that this MACD is finishing up this bearish period. All right. It only has so much left in this bearish period. We have Q3 and Q4 earnings coming up, and we expect those to be better than Q1 and Q2. The KDJ shows us bullish long term momentum going upwards. And the RSI shows us that we've had a little bit of a curve down, right? The market, right now we're not too oversold. We're actually, we are oversold, and we are looking to be bought back up. So that is currently what we're looking at here with Drive Shack. We expect that if this trend continues here, and we're going to go ahead and draw this trend line here. If this trend continues here, we're looking at, let me get that right there. All right, we're looking at positive forward momentum for Drive Shack. That is something that we can expect. And we are looking to break this downtrend here, and long term we have already been breaking that. We're looking to break this downtrend here, and we expect to continue this price movement. Elliott Waves theory might even tell us that here is the one, here is the two, here is the three, here is the four, and from the four, the fifth of the Elliott wave is always the largest. And we're expecting a five. And a five should lead us. It won't be a straight line. It will not be a straight line, but the five should lead us back to the all time high of $14. So I am currently down, let's say over $1,000, probably close to about $2,000, because I got into what some short term contracts. But when you get bit, like I've just gotten bit, we're gonna adjust the game plan a little bit there. We're still big believers in Drive Shack long term. The deal with Rory McIlroy, and the PR that's going for this company is only going to get more bullish. So the investment continues, the game plan changes just a little bit. So I'm just here giving my perspective of my investment in Drive Shack and what I'm looking to do and why I still remain bullish on Drive Shack. I will even be going to Drive Shack again sometime in the North Carolina region, because when I go, it is on and popping. Sunday, there's nothing left for Sunday. Sunday's fully booked. And we look at Monday, we have plenty of openings here for us to go ahead and get in on some swing. So that is my general thesis on Drive Shack, where we are, the current update. We're still bullish long term. We're just having to deal with the current market conditions. To protect the investment, risk on investment is to continue to buy shares, and then use charting to play some of these short term and long term contracts. And so that is it, you guys. That is it for the trade room. That is the update for Drive Shack. I've been really, really working hard to make these videos shorter than what I've been doing. But any questions, comments, make sure you like and subscribe. Anything that you want me to cover, or maybe that I haven't covered, leave a comment. I'd love to go over that and get some responses back to you guys. Other than that, I'm going to Ghana. I may not be able to make some videos for 3 to 4 weeks or so. So you guys enjoy the rest of your summer. And again, do not focus on the money. Focus on the percentages, and the money will come. Focus on the how, and the money will come. Peace, guys. Be blessed.